Hi, and welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. I'm going to spend today talking about a lot of different stocks. We've got a lot of movement going on in the marketplace. And, I think it's good to step back, go through some different sectors of stocks, all the requests that came through. We'll be using those to kind of decipher what the market is telling us right now. But first, I'm going to start with a quick lesson, and I want to delve into the moving averages. So let's go ahead and get into the agenda for today. So I want to talk about the power of moving averages, and in a lot of ways, I think a lot of people use the moving averages as a potential like a pullback area, which can be powerful, definitely. But I like to use them in other ways as well. I think they can be really excellent at helping us define the trend, and we can do that in any time frame because just realize that each time frame has its own trend, its own momentum characteristics. And then we also want to evaluate the price relative to the moving average environment to see whether it's overbought or oversold. And again, that can be different per time frame. And then finally, I want to just spend a few minutes talking about the longevity of the trend and how that can tell us a lot about where we should have an expectation of a reversal of a trend coming and whether it's going to be, a short-term one or maybe it's going to take a little bit longer. So all these are pretty powerful aspects to using moving averages. So I'm going to get into that, and then we're going to go through the stock requests that came through. My services can be found at rabilstockresearch.com. If you have an interest in trying the service, you can use the coupon code StockTalk for now. It'll give you the ability to see the first 2 months of reports for $50. I send out about 2 to 3 reports each week, trying to generate ideas, also give market commentary and what's happening on a sector-by-sector basis. Let's go ahead and get into this discussion on the moving averages. And I've got the chart of Microsoft. In fact, I have my sequence of charts, which is the grid of, in the bottom left is the monthly chart, bottom right is a weekly, upper right is a daily, and upper left is an hourly. And what I want to just show is I want to go through these different aspects that I was just talking about or alluding to with how the moving averages can help us see some things more than just where it may be. You can see it right here where Microsoft yesterday or this morning rallied up and finished the day right below a declining 18 and then sold off starting this morning after hitting that line. And that is a very powerful tool. And if there's slope to that line in either direction, it can be a powerful tool from that standpoint. In fact, on the weekly chart, it has really since July of last year, every time it's pulled back into the area of the 18-week, it's provided support up until this year. So that's one aspect is, yes, providing support and resistance characteristics. But I want to talk about just thinking about it in terms of trends. So if we start with the bottom left, we've got a price moving up and making higher highs and higher lows. We've got a rising 18 and a rising 40. That to me is a trend to the upside. I mean, this isn't rocket science. We can look at this and say the trend is up on the weekly chart, on the monthly chart. On the weekly chart, we had price above a rising 18 and a rising 40 for an extended period. And now just recently, the 18 has flattened out and price is below both moving averages. Now, I don't consider this a downtrend based on, if you think about it, if we're looking at a downtrend, that would be when the moving averages are declining. So we're really not in that position right now, but I would call this neutral now. After being positive for a long, long time, it's now characterized or categorized as neutral because it's below both moving averages. And this line, this 18, is actually flattened out. If we go to the daily chart, now we start to see while we have an uptrend on the monthly and a neutral trend on the weekly, we've got a downtrend on the daily chart. See how the 18 is below the 40 and price is making lower highs and lower lows below this. So this time frame, if I'm just looking at this time frame, is in a downtrend. And then we can go and look at the hourly and we can see the same thing. The 18 is below the 40, price is below both and trending to the downside, making lower lows and lower highs. So if we have those characteristics in place, we have a downtrend in place. So I can see uptrend, neutral, downtrend, downtrend. Okay, so I'm looking at 4 different time frames, and I've got 4 different trends in place. Now, yes, the hourly and the daily are basically going in the same direction right now. But if we get a reversal in Microsoft, if it ends up turning the corner and getting through the 18 and flattening that out, then it's very possible we could have an uptrend, neutral, downtrend, and this could actually turn positive. So you just want to be aware of this, and I think it's a pretty powerful tool to use these in multiple time frames because you can see where not only where support and resistance is, but also what the direction is for each trend. Now, I'm not going to go into the momentum, but obviously you can look at the momentum of each trend as well. Let's look at the second component, and that's the overbought, oversold condition. So notice how this was getting pretty far away from the 18-month line, this price, as it finished off the year. Now, it actually was pretty far away, and it had been going up for a while, but it waited until the new year to really start to pull back. But this has been extended now for about 3, 4, 5 months, where it's getting a little too far away from the 18-month to the upside. We really didn't have that characteristic of being too far away, although you can see these periods when the price gets a little away from the moving average, it sort of acts like a leash and pulls it back down. So that's the weekly trend where it's starting to roll over. It's starting to get a little stretched away on a weekly basis, but I wouldn't consider it overbought or oversold right now on a weekly chart. If we go to the daily chart, now look at the daily is here. The daily 18 is here and price is way down here. We're starting to get stretched away to the downside. So while we got overbought on the monthly chart and we're trying to work that off to the downside, coming down, we're actually getting oversold on the daily chart. So you want to kind of keep all of these. This is why I like to have all 4 time frames up at once, because I can look at this and I can see, yeah, the trend is up, but it's overbought. This trend was up for a very, very long time. So let's go ahead and look at the longevity of the trend. Look at where the moving averages crossed to the upside in Microsoft. That was way back in January of 2020. And it had been going up. The 18 was above the 40 for this entire period. So you don't have to necessarily look at this as rocket science, but if you start to look at this part of the equation, it'll tell you how long this trend has been in place, and where we start to see something like this where it starts to roll over, I think we should be a little bit more concerned that this could take a little while, because the 18 is rolling over for the first time in quite a while. Even through this bear market drop here, this 18 was rising. So the fact that this is very close to turning negative, where actually the slope is turning down, I think is a bit of a concern here. And whether it turns into a sideways pattern or it has downside risk, I think this is going to be a little bit more time consuming, just based on how long it has been going up. So, and then you can actually look at the monthly chart the same way. I mean, this turned up in 2013, 2014. They crossed to the upside. The 18 crossed above the 40 and has been pretty much steady up all the way since that time. So we've got the 2 bigger trends with the longevity problem. Both of these trends have been going up for a very, very long time. And the real problem with Microsoft is that it had spent a long time without coming back and touching the 18-month. So these are all types of things I want you to start to think about when we're going through and looking at the moving averages, and the reason why we're using multiple time frames. Let's go ahead and get into the individual stocks, and we'll do more of this analysis looking at the moving averages and also the momentum characteristics. So undoubtedly by now you might have noticed that I actually did the lesson prior to Microsoft's earnings. And so now I'm looking at a chart Thursday morning as the market opens, and we have a a live update of Microsoft. So I thought I would just look at this now. Notice how on the daily chart we came up yesterday on the gap of the news of the earnings and gapped up and just missed hitting the 18-day. Acting as resistance there. But this trend is still down. But notice what's happened to the hourly. The hourly is starting to work its way through both moving averages, and now the 18 is rising. So this has now moved to neutral in my book, still neutral on a weekly basis and an uptrend on the long-term basis. So I think we're going to bounce around a little bit. Notice how the MACD has come down here. That tells me that, wow, you could get a rally, and I would almost expect a rally off of this. It should act as resistance as the MACD line moves up towards its signal line. We still have pretty good strength based on the ADX condition on both the monthly and the weekly. But the key now is to watch and see how this reacts at this 309 declining 18-day. If it gets through that, then I'm starting to think the target would be up around 319, 320, which is the 18-week. So that's kind of how I'm looking at it right now. Let's go ahead and start getting into the other requests that came through, Nvidia being the first. So similar situation, and now I've got my 4 charts up. In the upper left, I've got the relative strength. And the reason why I like to do that is I like to show how, so this pull, if we compare this pullback here to this pullback, which was the bear market decline, right here. So we've got this decline here and this decline here. Pretty strong sell-offs in both cases. But notice how the relative strength here at the bottom of the bear market was actually hitting a new high. And here we've pulled back in a pretty ferocious manner, but this is almost a leader to the downside based on what the relative strength is doing. It's clearly underperforming the S&P. So to me, that's a big piece of evidence that I think is a little bit more negative. Now, I still think we're in the range where we could get a bounce. So price has come down towards the 40-week moving average, and that line is still rising, even though this is starting to lose slope on the 18. So we could get some kind of a bounce off this, but again, because of what MACD is doing, I would sort of assume it's going to be a little bit of a tougher road. Now, so we've got some mixed signals. ADX is still pretty strong on both the monthly and the weekly. But again, MACD is looking a little tired, and again, the relative strength is weakened. So I would say your best, the highest probability is this is going to end up forming a range. But we could see more weakness, and bigger support is closer to 200. DVN, a part of the energy sector that is incredibly strong, and this is just not backing down. I mean, every single time it pulls back, look at the respect this has for the 18-week line. Every pullback over the course of this year has found support at the 18-week, including just this past week. So the negative with this right now is it's getting a little overbought. We're starting to work our way up towards some bigger resistance. Although it did get through the 50 level, that's a pretty good sign. I would just start to feel like, while they're short term, I would say we probably do have a little bit more upside. Notice one thing that is happening. So the momentum is really good on the monthly and it's really good on the weekly, but we've made this last new high and ADX isn't confirming right now. So that's a little bit of a red flag, especially based on the fact that we're getting a little bit away from the 18-week again. Notice this hasn't gotten really stretched away, but it's gotten into that, shorter term overbought condition. So Applied Materials. I find this to be pretty disturbing, the way this is traded. This has been a real leader. Notice the relative strength has started to tip over and break through its moving average line. I use a 30 MA here, and it's come back down through that line after trying to break out. Really ferocious selling 3 weeks in a row. And I wanted to bring this up again just because it's back below both moving averages and it hasn't got much of a bounce off that initial sell-off. So we're putting a little bit more pressure on this downside area, which support is a little bit bigger down around 125. But I don't think there's any rush in this. Just based on the recent action and the fact that the ADX didn't confirm the last new peak, I would tell you that we could be in for a longer correction phase, and maybe even this wants to work its way back and meet up with the 18-month before it's ready to do anything again. Ford Motor. So been a great stock, just has had an amazing run, but got way too extended on the monthly chart. I mean, so we made a bottom in a V-type fashion without moving sideways at all. We just turned on a dime, which, you know, is not really crazy in the environment that we've had. Made a move up and had a nice pullback, formed a pinch on the monthly with strong ADX, and then had another run to the upside that was pretty substantial. But look at what happened here. Formed a big tail on the monthly chart. And now I would assume the midpoint of this bar will be a problem area up, you know, mid to high 20s, something like that, I think is a problem. Now, again, because the momentum is strong, I'm not necessarily looking for a bear market to start in a stock like this, but you could go through an extended corrective wave, corrective pattern, or even a sideways pattern that lasts a while after such an extended move, finished off with a pretty climatic kind of reversal bar. Conoco, so really nice breakout, and we can see the longer term chart taking out some kind of key areas. Now, this is another one that's made a pretty big move in order to break out. So we're taking out some key areas, but we're kind of overbought in the process. This is the biggest weekly bar, monthly bar, that this has had since the start of the move. So a lot of times when I see that, I expect maybe a little bit of probably finishes off the month at the high end, maybe get a little follow through into next month, and then we start to correct or consolidate. But same concept here as DVN. Momentum is good, making higher highs and higher lows, good momentum characteristics, especially on the weekly, and in this case on the daily as well. I think this is probably headed for 100. In the near term, just based on the way this has gotten to 90. A lot of times when you get to 90, you make it to 100, just a big round number. So this request was interesting because we've definitely seen some improvement. If you go and look at the oil service stocks, go and look at Halliburton, go and look at Schlumberger, definitely some real improvement. And one of the key things is we had a declining 18-month that we weren't ever able to hold. So look at how once this turned down, this got above, but then when it pulled back, I couldn't hold it. And then it rallied up, kind of failed, tried to rally up and didn't hold, and then got back below. And now look at what's happening. This is the first time in several years, since 2015, that we have successfully tested and held the 18-month line. Now it becomes a question of how long can this trend go? Is this something that's going to turn into a monster move and a big substantial upside move or not? What we're going to want to do to determine that is watch the momentum characteristics. It's too early to call for divergence here because I know that ADX is still at 15, but if we get going and we break out and we don't see this start to budge and start to move higher, we want to see this crossing 25 as we're breaking out or getting pretty close to that. If that's the case, then this could turn into a pattern that moves its way up towards, almost towards 300, maybe like 280, 290, something like that. Would probably be my target if we start to see confirmation on a momentum basis on the weekly ADX. If not, then it'll probably just be a trading move. Visa is at a very critical point here. So let's just focus in on this chart. We've had this long uptrend and this decline that broke the 18-month line. Because look at how many times this has tested and successfully held the 18-month, except for this one. That was when the market dropped. And that was a big bear market drop, and this did not take very long to get above. But now look at what's happening. We're breaking this line. We rallied up to it. We're breaking it again. This line's starting to lose a lot of slope. The relative strength has been deteriorating for a few years now. And so, 216, 217, 218 is critical. If this can't get back above that, I think this is a pretty disturbing pattern, one that could turn into a rollover, like a real bear market type of a pattern, or just a big waste of time. Now, 200 is a pretty key area, keeps kind of bouncing off that area. Even though it got below, it never really got disconnected from 200. So that would be something I'd be watching for. Google. So Google, I think, is okay on a longer term time frame, but what's taking place right now is we got too far away. Look at this MACD. So I know MACD is a momentum indicator, and I use it that way as well. But when it gets stretched away from the zero line, we think of it as an overbought, oversold oscillator, and it just got too overbought, and now it's working its way back down to neutral. But it's not there yet, and I think it might need a little bit of time. I wouldn't be surprised to see another rally and another comeback like this and see the MACD do this and get a little bit closer to the zero line here. As long as we don't see a lot of strength in the sellers, then I'd be sort of thinking that this is going to successfully work its way back a little closer to the 18-month, maybe somewhere in the region of 2,500 or a little bit lower. It catches up with the 18-month line, and then we start to see, a little bit of a stabilization of this pattern. So I would be watching to see how this MACD gets down here and making sure that the red DI doesn't go nuts. If red DI keeps climbing, then that could turn this pattern into a longer correction phase. TSM tried to break out, it's trying to turn the corner, but it's doing it at the worst possible time. Market action week, and we're seeing topping patterns taking place in the semiconductors. So I like what's going on. Look at the relative strength hanging in there. The problem is this was too sharp of a pullback, and I think it's just having a hard time withstanding the sell-off that's taking place around it. And so if this can survive, and what I would say surviving, if it holds 120, that's definitely surviving. But even if it comes down, breaks these moving averages, but finds support at like 115, 116, something like that, then I don't think it's put itself in too bad of a position. But based on the way this is pulled back, it pulled back too hard. I can't really play this off the daily now because it's run through both the 18 and the 40. If it can hold the 18-week and the 40-week and sort of stabilize and channel, then it could get back and going here pretty quick. So that'd be the first thing I'd be on the lookout for if I'm interested in buying this. If it breaks the 18 and the 40-week, then this whole move is on hold for a while. MT is making a pretty nice turnaround on the longer term chart, but just the recent breakout, failure to break out. So you tried to take out that high and then reversed on a dime. I think this is still caught in a channel with support, 27, 28, something like that. But keep an eye on this because of the way this is cupping around. I do think there's improving signs in this. And again, if it can survive what's going on in the market, then this has a pretty good chance of having a rally after that. Let's look at NextEra. I think this is kind of important because I'm seeing a mix. There's definitely a mix. There's utility stocks that have been strong and have been trending and working higher over the course of the last year or two that are showing signs of some sellers stepping in, obviously based on the environment, maybe rising rate environment, that type of thing. So a lot of selling taking place here and a lot of damage being done. I think they're supported 70, but I think this stock is a pretty big waste of time. I wouldn't be interested in buying this kind of weakness. You're breaking the 18-month. You're clearly breaking the weekly moving averages. Too violent. The selling is strong here. Give this some time. Make it settle. Form a little bit of new support. Corning. I do like what's going on here. Now, because there was so much overrun here, and look at the ADX, strong selling on that was based on the sellers, this ADX reading. I would force this to do a little bit more. Now, I know this has got a pretty nice move here, and green DI just took out red on here. What I'm looking for is a successful test of the moving average, like the 18, come down here and actually turn up and pivot, make a pivot low, and maybe even come down under 40 and then come back above 40. And if we can pull that off, or if this goes a little higher and then tests 40 and holds it, then I would have a lot more confidence that this is a true turn. I like all the support that's here in place on the monthly chart, but a lot of selling pressure here and a lot of overrun. So I'm looking for a little bit more confirmation, almost like I want to see a 1, 2, 3 change in trend. We have the 1, but we need a test, some form of a test, even a 38% retracement of this move, and then a turn back to the upside, and I'd have a little bit more confidence that this is ready to get going again. SBSW, so this is gold mining. They're showing signs of improvement. There's no doubt about that. There is signs of stabilization, but we had a lot of overrun in the MACD. So same sort of thing. I'm looking for a little bit more of a confirmed reversal in the pattern here. This rally up has shown no real strength in the green DI. Look at this. See how the green DI crossed above 25, but it did not get above that red DI. So that's not really confirming evidence that new buyers are really stepping in yet. Now, if we can hold here, pull back, hold, consolidate, and then turn back up again and get that green DI to break out again, then I think I'd be a pretty positive sign. I'd also like to see this get back above the 18-month. DH Horton. So the home builders were withstanding for a while, but now they've kind of given way. Look at the failure of the breakout. Probably easiest to see on this weekly chart. You see how this had a breakout pattern that couldn't hold, kind of like an upthrust in Wyckoff speaking, breakout that fails and then works its way back to the downside. I think this is caught in a range with support probably 80, 85, something like that. If we break the 18-month, then this is really going to be a waste of time for a while. No rush to be a buyer in this right now. Okay, that's all the time we have. Thanks for joining me. Please feel free to send your stock requests to stocktalk@stockcharts.com. Have a great week. We'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.